Hi there, welcome to Real Estate Rundown. I'm Lori LeCompte and I'm a real estate agent in Northwest Arkansas. Today I want to talk about the steps to prepare you for the home buying process. Buying your first home can be extremely exciting yet overwhelming at the same time. There's so many things to consider before you even start to shop for homes. So I'm going to break down the process into 5 key steps to help you get started on your home buying journey today. Number 1, monitor your credit score. Now, your credit score impacts various aspects of your life, especially when it comes to making a large purchase like a home. It's a determining factor in being approved for a loan with the best possible interest rate. Now, your credit score is a numerical rating that ranges from 300 to 850 and tells lenders how responsible you are when you borrow money. You should monitor your credit on a regular basis. You're entitled to a free copy of your credit report every 12 months from each of the 3 nationwide credit bureaus. Those are Experian, Equifax, and TransUnion. If you go to www.annualcreditreport.com, you can access all 3 reports. Go to this website, let's say Experian. Start with that one, run your credit report, wait 4 or 5 months, run it with Equifax, wait 4 or 5 more months, run it with TransUnion. That way you're monitoring your credit every 4 to 5 months and you're doing it all for free. Monitoring your reports on a regular basis can help you catch something early on that could be negatively affecting your score. Sometimes small actions that you take can really improve your credit score. Number 2, be realistic about what you can afford. When you're setting a budget, it's really important to keep your head out of the clouds. A lender will tell you how much you qualify for, but you want to think about how much you're comfortable spending. Make sure you don't overextend yourself. Start by thinking about how much you can afford on a monthly basis for home expenses. Many experts recommend spending no more than 30% of your gross monthly income on housing expenses. So let's talk about some of those expenses with home ownership. Your principal, this is the money you borrowed to purchase your home. The interest, this is the fee the lender charges you on a monthly basis to borrow those funds. Property taxes, you're required to pay those to the government based on the value and the location of your home. Insurance, you're going to need homeowner's insurance. That protects your home against any damages. Depending on the home you purchase, there may be association dues. These are fees you must pay if your home belongs to a homeowner's association. If your home is not part of a homeowner's association, you won't have to pay this fee. Now you also need to consider a down payment and closing costs. First and foremost, you're going to want to save a little bit for your down payment. The minimum down payment on a conventional loan is 3%, and an FHA loan is available with a down payment of 3.5%. So if you heard that you must save up for a 20% down payment, that's just not the case. That being said, the larger the down payment, the more equity you'll have, and the lower your mortgage payments will be. By paying more up front, you can save on interest and be less likely to pay private mortgage insurance. Your lender will talk you through these various loan options. The other large expense you need to plan for is closing costs. Closing costs are the fees associated with processing and securing your loan and deed for your new home. Although the exact amount you need will vary depending on your loan amount and your area's tax requirements, you can typically expect closing costs to be between 3 and 6% of the purchase price of the home. So it may take you a while to get past this last step, and that's okay. You'll have established a budget and you will be more knowledgeable with the costs of becoming a homeowner. Number 3, start gathering up all necessary financial documentation and find a good lender. By getting everything together ahead of time, you won't be scrambling around trying to locate things at the last minute when your lender's asking you for them. Depending on the lender and your situation, the documents can vary. But try and locate your last few pay stubs, bank statements, and your W-2s from the past 2 years. Also, be ready to answer questions such as, what is your gross income? What are your monthly expenses? Do you have credit card debt, student loan debt, car payments? How much do you have in your savings account? And have documents ready to support any additional assets you may own. Now start shopping around for a lender. No 2 lenders are created equal. Qualification guidelines, interest rates, and closing costs can vary from lender to lender. When comparing lenders, ask each one to provide you with a loan estimate. This will indicate the loan terms, projected payments, and closing costs for your potential mortgage. Number 4, you found that lender. Now get pre-approved for a mortgage. Let's talk about the difference between pre-qualification and pre-approval. Now, getting pre-qualified for a loan does not guarantee that you'll be able to obtain a loan. When you get pre-qualified, in the traditional sense, lenders only estimate your finances based on the information you provide. A pre-approval requires a thorough investigation of your finances that includes verifying your income, assets, and credit rating. When you get pre-approved for a loan, you're guaranteed that you'll be able to obtain the loan, assuming your finances don't change between pre-approval and closing on the home, along with the lender receiving an appraisal at a high enough value to make the loan work. A pre-approval is helpful because it tells you exactly how much the lender is willing to let you borrow and specifies the cost of obtaining the loan. Being pre-approved also tells the seller you're serious about buying, which can make a difference if and when you find yourself in a bidding war. Number 5, find a supportive real estate agent. Now, this can easily be step number 3. Whether it's by word of mouth or through doing some online research, connect with a real estate agent who is trustworthy and reliable. Your real estate agent will represent you throughout the entire home buying process to ensure you find the right home for you. Your agent will ask the important questions, things you haven't even thought of. They'll make an appropriate offer, have the power to negotiate, receive the necessary disclosures, and walk you through the contracts. When you meet with your real estate agent, have a prepared list of must-haves for your home, such as number of bedrooms, needed square footage, desired area, and then put together a list of nice to have, such as a modern kitchen, a walk-in shower, things that you're willing to compromise on. You'll be surprised at how much smoother the process will go when you have a good real estate agent on your side who is accessible and communicates with you regularly. And your real estate agent will have a list of preferred lenders to refer you to. Now let the fun begin. Start home shopping. Thanks for watching. Feel free to comment down below on real estate topics you'd like for me to cover in the future. Knowledge is power.